Hi there, everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it is entirely to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so since last week's update, guys, not much has really changed. You can see here the market is still hovering around 7,000, just tracking absolute sideways. Almost no heartbeat here, guys. The market's dead. Very light volumes. Okay, so we're seeing declining volumes as well, with a lot going on. So if we have a look at what's been happening, we had our big pullback down near 64. Since then, we're up about 10% from those lows, and the market is looking heavily overbought. Doesn't matter which indicator I bring up at the moment. From a short-term perspective, it's looking extremely overbought. Hovering also just shy below our 100-day moving average there. My top side target was either around here, which was, that sort of 69.70 or 7,000, or that average was kind of my top side target. If we do clear through here, I'd suspect the 200-day moving average will hold in the short term, because this is extremely overdone, guys. Extremely overdone. So, the fact that we're overbought now here, it's not going to take much to get some kind of catalyst to move us back down. It's just going to be a matter of what that's going to look like and what that's going to be. So, one thing that could be the catalyst is Wednesday night, we will see the US CPI reading. If that comes in as expected or higher, I suspect that the market might sort of turn back around a little bit. And I'll talk a bit more to that in a moment. But technically, we're definitely overbought. I suspect, there'll be a bit of a pullback, but we know in these conditions we could get one more leg higher as well. If that's the case, I suspect we won't see the leg higher than 71.70 unless we get some kind of huge positive catalyst to drive it further than that. So coming across the S&P 500, okay, you can see here similar sort of story, massive rally in the short term, back up near some key levels and just tracking along sideways that resistance. Once again, if it breaks through that resistance level, I'm going to have to change my tune a little bit here and expect a bit more of an upward tick. Now, 200-day average, once again, is the target to the upside if that breaks through. Otherwise, same as our market, heavily overbought here, guys, and I really don't suspect we're going to see much more in the current move. So, pullbacks on the table. All in all, guys, look, considering we're still got the threats of further interest rate hikes, potential US official recession, at the end of the day, things aren't looking rosy out there for me in the short to medium term. I still feel there's some negative pressure on the market. With that playing out, I suspect we might come back down for a bit of a double bottom down here, right? So that for me is heavily, a large potential of happening at this point of time. Okay, there's a decent pullback in a sideways period until we start seeing a little bit more confirmation that the Fed has in fact finished lifting interest rates and is becoming a little bit more prepared in stimulating the economy again. It's a complicated situation we're in right now between trying to bring inflation back down, bringing CPI back down to the central bank's range of around 2 to 3%. Okay, juggling that whilst trying to avoid a recession. And I think that's going to be pretty hard considering the strong job numbers and wage growth that we're seeing. And people might be thinking, okay, well, we're starting to see commodity prices come down a little bit here. Well, yes, that is the case, but it does take some time for companies to hand back those savings. And if you're starting to see huge wage growth happening, which we're starting to see signs of that, well, that's also inflationary on its own. So there's a few reasons why inflation might persistently stay high for the rest of this year. I don't think it's going to last much more longer than this year, to be honest, guys. Right? So if you think about it, prices and inflation may have topped, but it doesn't mean it's coming down straight away, if that makes sense, right? So it's like I said, it's a complicated beast, and it's a balancing act by the central banks that have been lifting rates to try and battle this inflation. If we don't see inflation come back down again in the next reading, well, things could get a little bit rough. Okay, and that's kind of where I'm at the moment with the markets. So this raises the question. I've been talking about this a lot with quite a few clients at the moment. Are markets overbought? Well, it depends on what time frame you're looking in, right? So from a long-term perspective, there's a lot of cheap stocks on the market. Okay, so if you're taking a 2 to 10 year outlook on things, well, there's heaps of great profitable stocks that are still going to be great and profitable, whether the US go into a recession or not, whether we go into a recession or not, right? You've got to be eyeballing some of these copper miners. Look at Oz Minerals; it jumped 30% on a takeover offer. That just shows how cheap they are at the moment. Okay, so there's a lot of depending on the time frame you're looking at, things are not overbought. Okay, there's a lot of good quality stocks on the market. But from a short term perspective, things are definitely overbought. The market rose very quickly. It was a 10% rise in a very short period of time on the back of the Fed giving a little, market taking a lot. That's my saying at the moment. The Fed gave a little, market took a lot. We do not have the green light to buy from the Fed, in my opinion, guys. All right, the Fed will continue likely to lift rates unless that CPI reading comes back down. And in fact, a lot of people are still expecting a 0.5% rate hike from the Fed at the end of September. It's just not many people are talking about it right now. So we've got a bit of calm in the markets for the moment, but I suspect that's not going to last. I think we've still got a bit of volatility, a bit of bottoming out still to do. A bit more certainty needs to be put on the table that the Fed, in fact, has come close to the top of their rate hiking cycle. And if that's the case, then that's the green light to buy, hold long, go nuts, right? But we don't have that. We have a lot of complexities out there at the moment. Inflation is basically putting a roof on the market. The more bullish you become, the more commodities and things start rising, the more of an inflation problem you have, right? So the more positive the market gets, the more inflationary it's going to be also. So it's finding this balance, and the central banks are trying to get us to all tighten our belts. They're trying to destroy demand. They're trying to bring that CPI reading down. And if they continue to go about it the way they have been recently, well, the markets haven't finished selling yet, not completely anyway. I do feel we've almost found the bottom, okay? But I just feel we're going to go back and have another go at it first, right? That's where I'm at the moment. That could change, okay, as the rhetoric changes. If the CPI readings start coming down quicker, there's all sorts of things that are going to change that view in the short term, guys, in the medium term. But right now, knowing what we know at this point of time, I feel markets are overdone. We're going to see a bit of a pullback again. Anywhere between 5 to sort of 10% is on the table still, as a pullback between now and the end of September. Okay. All right. So, as I've mentioned, CPI Wednesday night. Expectations are that core CPI is going to increase slightly, headline's going to fall slightly. We'll see what happens there, and we'll review it as things go on. I'm not going to sit here and try and predict, but the fact of the matter is that CPI still, core CPI is still going to be 6%. Headline's still going to be 8.7% thereabouts if you're following the forecasts at the moment, and that can't be good, right? That cannot be good, guys. All right. If CPI hangs high, the central banks are going to continue to lift rates for the rest of this year. All right. So let's see. All right. That's all we can really do is just kind of a let's see scenario. And that's why the market's tracking on sideways, right? People have got FOMO that don't want to miss out on the buying opportunity. But at the same time, it's hit a point where it's so overbought in the short term, it has to pull back. And don't get me wrong, if the market pulls back, it's a huge buying opportunity. Right, I know I'm going to be buying on the next pullback, and I'm really hoping it's going to be a sizable one, right? So there's definitely going to be a sense of FOMO out there, guys. So I suspect we're going to whip around for a while, just as quickly as we're going to sell off. Well, I think we're going to sell off, I should say. I think we're going to rebound also. So you got to be ready to play the moves. Okay, that's I think it's likely what's to come. Job numbers equals rate hikes, guys. Okay, so I mentioned this before. Strong job numbers, strong wage growth, plus strong CPI equals rate hikes. There's no other way of spinning this. So this is why I'm not fully understanding why markets are going to could be this bullish. They're too bullish considering what we've got on the table. Something needs to change here. CPI needs to weaken off. Okay, that will get me very bullish, but if inflation remains high, well, I'm not going to repeat myself, but yeah, it's not looking great, right, in the short term here. All right, so have they really bottomed? I think markets did bottom. Okay, I think we have found the bottom, but we're going to retest it again. will go down and have a play around. XJO down near 66 or 64, and the S&P 500 back down near 36 at least. Okay, so I think we're going to have a reasonable pullback again over the next few months. Retest that bottom and then see where we're at from there. Really, is the view. The other thing I'd have to mention is, there's still some brewing tensions out there between China, US, Australia, and other countries around Taiwan. There's a lot of sort of negative talk around China's growth as well at the moment. COVID zero is not great for commodity prices and things like that. The last GDP reading from China is much, much lower than the 5% that they're predicting for the year. So at this point of time, once again, I don't see the bullish case short term for commodities. Okay, longer term, yes. Okay, when the Fed flips on their head and starts talking about stimulus again, and we start talking about green energy and things like that, then absolutely you're going to be bullish. Things like copper, lithium, and you've noticed that already those lithium stocks have moved higher on the US bill that was passed yesterday. So the rare earths sort of future metals plays are going up already. But when you're starting to look at things like iron ore and other metals, well, they haven't joined in as much just yet. And that would be tied heavily to the tensions around China and the US and Chinese growth. So you've got to watch that space. The Australian market tends to do something a little bit between what the US is doing and what's happening in China. And the Chinese markets have been pulling back on worries that stimulus won't be enough to boost their economy. There's a few problems and issues, especially around the COVID zero policies. So a lot happening over there as well. So for me, the outlook is not that great. Okay, it's very different to what we had mid-COVID. Yes, COVID, we're all going in and out of lockdowns, but the governments around the world dropped the interest rates to zero, and they basically just threw money at the economy. Now they're reversing that, and they're reversing gear for the moment. We don't know how long they're going to stay in reverse, and that's the big question here. So for me, there's a huge amount of uncertainty over the market, and that's going to put a roof on this market at the moment. Where that roof is, I'm not sure. Could be another 100 points higher than where we are right now. I couldn't say, but I'd say for the moment there would be a roof coming onto this market, and I suspect we'll see a bit of a pullback at some point as well. I've repeated that 3 to 4, 5 times, but that's just what it looks like for us at the moment. So, all right, so that's where we're at, guys. There's really not much more for me to say. I may change my view by Thursday, so watch in for next week's update, and I'll talk about what's happened after the CPI reading and how the markets are reacting to it. The last thing I'd mention is obviously reporting season. You got CPI reporting tomorrow. That's going to lead the banks one way or the other. This is what also makes me a little bit bearish is the banks have risen so much already into the reporting. NAB fell quite largely today on the back of their quarterly update, and I suspect CBA may do a similar thing tomorrow. But let's just see what the report looks like. Once we read through the report, we can establish a view. Very overbought CBA, back up almost near a 20 PE ratio. People will try and strip the div. So at some point, in the next week or two, I think you're going to be looking at getting short the banks. Okay, it might lift a little bit and then fall on the dividend, or it might just fall straight from the report, depending on what the report looks like tomorrow. Okay, so tomorrow tomorrow onwards, I'll be looking at opportunities and entry signals for a bearish trade, being that CBA is so overbought at the moment. All right, so a few opportunities coming up, I think. Just need some confirmation of that and work out what catalyst is actually going to send this market lower. Is it going to be the CPI reading, or is it going to be something else? And we'll go from there. So thanks for listening in. I'll leave it there. Take care and bye for now.